Hello there. Welcome back to grade 11 accounting. In this video, we want to look at the preparation of the current account note. So we are going to look at question 3.2 of this question paper. So this question 3.2 reads, it's for the current account for SS Brothers, and it reads, S. Tumbeni and S. Kolisi are partners in this business. The financial year ended on 30 September 2019. So very important to take note where our year is ending. And then on the third part, complete the current account note for the financial year ended. This person has got 19 marks. So this is the part only that we are going to look at according to this video. So if you go and try to see further information given in the question, we are given information A, whereby you're given extract from the accounting records on 30 September 2019. You go down, and then you've got also some additional information that are going down there that we need also to go through before you start answering the question. So going to our answer section, you'll see that we have our answer section in terms of our current accounts. We have got a question at 3.2.1, and this is our current account note for partners. Then we are given partner salaries. That is at the beginning item that we need to enter there in terms of two columns. So we have partner salaries. We have to go there and try to find out what figures are given in terms of these partner salaries. So if you go up to the question, let's try to see. Remember, this information is stated in the partnership agreement. So obviously, we want to look at where we are having the partnership agreement elements. Here, that's where we're having partnership agreement, which is information C. The partnership agreement says the following, and we look where they are talking about the salary, which is the Kolisi received an annual salary of 240,000. So this is where the salary for Kolisi. And then we are given that the next point again, Tumbeni received a salary of 5,000 rand per month, more than Kolisi due to extra management responsibilities. So basically, we can start by entering the one for Kolisi, which is 240,000. So this one we can go and try to enter it in our answer section. So we come here. So we're saying partner salaries, and then for Kolisi, we have got 240,000. So this is what we have. Then we go back and try to see in terms of the other partner, which is Tumbeni. These are big said received a salary of 5,000 per month more than Kolisi. So if it's 5,000 per month, so we are going to say what Kolisi has received plus the 5,000 per month. So basically we are saying 240,000, 240,000 plus 5,000, which is per month, and we know that in a year we've got 12 months. So we calculate it just like that and try to see what do we get from there. So if you say 5,000 multiplied by 12, you are going to get your answer is 60,000. So here you are going to get your 60,000. So basically you're saying 240,000 plus 60,000, and the final answer now becomes 300,000. So basically, this is the one salary for Tumbeni. So we go there and enter as such. We are now on our answer section. We are saying for the other one, we are having 300,000, but obviously you would need to show in brackets how you arrived to do 300,000. So we said 240,000 plus our 60,000. So in brackets here, we can just say maybe 240,000. And then we added 60,000. So to show the calculation for the first partner there. So now we go to the interest on capital, and the interest on capital for Tumbeni is already calculated, pre-entered as for 2,000. So we need to calculate the interest on capital for Kolisi. So we go up there and do a search and try to see the terms of calculating that interest on capital. Obviously, it's stated in the partnership agreement we are here. So we can as well try to calculate that interest on capital. So we give it as 12%. So 12% basically is 12 over 100. So we are saying 12 over 100. And then you multiply it. We try to see, we have got further information that is that is pertaining that interest on capital of Tumeni. They are saying on this point, Tumeni received a salary of the month due to establishment responsibilities. But then if you come there, let's try to see in terms of the other information that we are given there. So if we refer back to our answer section, we'll see that in our answer section, we have the interest on capital for Tumeni being pre-entered, so it means it's there. So the one that we want to calculate is for Kolisi, and we're going to use our 12%. I'm going to apply to both partners, and then but we are told on the information B that on 31 March 2019, Kolisi increased this capital contribution with 50,000, which this was entered in the books. So basically, what they are trying to say when they say it was entered in the books is this 50,000 is inside the figure, the balance for capital for Kolisi. So if you go there, you'd see that for Kolisi capital, we have got 450,000. So we are saying you say 450,000, and you multiply. Sorry, you will subtract the 50,000 that was introduced during the year. You'll be left with 400,000. So it means that this 400,000 is going to apply for the 12 months. So we are just going to say 12%, whereby we say 12 over 100, and then we multiply by 400,000. And then the answer that we get there, let's just try to see 0.2% times 400,000. You're going to get it as 48,000. So here, the answer that you are going to get is 48,000. So having that now, we are going to also calculate for the 50,000, but also we need to know the proportionate number of months that that capital was in the business. Remember, it was introduced on 31 March 2019, and we know that our business is our financial year is ending on 30 September 2019. So so to end of September, from March it was April, then April, because it was already end of March, April, May, June, July, August, September. We've got 1, 2, 3, 4, 5, 6. So we've got 6 months that we had this capital of 50,000. So we're going to calculate it 12%, and then we make a proportion of 6 months. That is 6 over 12. So we come here, we say for the annual capital, additional capital, we are going to say 12 over 100. We multiply by 50,000. And we make a proportion of 6 over 12, which is 6 months. And we calculate it as such and try to see what we get. You see that you are going to get 3,000. And then now, calculation of the total interest on capital now is now going to be your 48,000, which is this one, plus this one, which is your 3,000. And we are going to get your 51,000. So as simple as that. So we go there and just summarize this 48,000 plus 3,000 as our working. And then on the answer section, we're going to put our 51,000. So we go down and try to rectify it as such. So we are here now. We are saying interest on capital. Remember, according to our working, we said 48,000 plus 3,000. And the answer that we got there was 51,000. Then on the partners bonuses again is something that we also find in the partnership agreement. We go there and see what are they saying about bonuses. So if you come to the partnership agreement now, they are saying, let's try to see. As per the bonus, we can just try to look for the information that is, we are told the second from last point, Kolisi received a bonus of 10% of his annual salary. And we know that Kolisi is receiving 240,000 as the annual salary. So if you say 10%, we are going to say 10 over 100, and then you multiply by 240,000. You do that, you are going to get your 24,000. So the bonus is applying only to Kolisi according to the explanation. And Qualis is getting 24,000 after the calculation. So we go there and just make that adjustment. So we are here. We are saying bonuses is going to apply to Qualis with 24,000. So we are saying here we have nothing, so we can just put maybe a dash. And then having done that now, we can be able to find now the primary distribution. Remember, the primary distribution is going to come here. And we're going to say primary distribution. So remember, to get our primary distribution, we are going to add partner salaries plus interest on capital plus our bonuses, and you get your primary distribution. So if we add our 300,000 plus 42,000, we are going to get your 342,000. So here we are saying we have 342,000. You do the same here, 240,000 plus 51,000 plus 24,000. You are going to get your 350,000. So having done that now, we are now trying to go to the part of final distribution. So on final distribution, we are going to add the total of the primary distribution to get the total primary distribution. So we are going to say our 342,000 for Tuberi plus our Qualis 350,000. So basically, we are saying we are going to say 342,000 plus 350,000. To add the total of the primary distribution, you see that the answer that you are going to get there, if you say 342,000 plus 315,000, you're going to get your 657,000. So you are going to get your 657,000. So this 657,000 is representing the total of the primary distribution, and we are going to subtract it because the issue is we want to allocate the final distribution according to the profit sharing ratio that is given. So we need to find out the profit that is available to be shared. So we go there and find out about the profit that we have for the year. So you see that the profit that we are having for this year, profit and loss net profit, we've got 750,000. So if you come here now, we are now saying So we are now saying 750,000. You subtract 657,000 now. The total of primary distribution, subtract from the figure for net profit. And then you subtract that. Let's try to what we find out what you get 750,000 minus 657,000. And you're going to get your 93,000. So here we have our 93,000. So this is the profit that is available to be shared. And then we go and take the profit sharing ratio now. What is the profit sharing ratio? We go to the question and try to see what is it saying about profit sharing ratio. Right. If you go to the last point in the partnership agreement, it states that remaining profits are shared equally between partners, which means we are just going to divide by the number of partners that are there. It gives you the sharing in terms of equal. So we have got two partners according to the question. So we divide by 2, get the equal distribution of that profit. So we are saying 93,000 divided by 2. We are going to get your answer at 46,500. So this 46,500 is for each partner. So it's going to apply on in both partners. So we're saying they're sharing equally. So it means here you're going to have your 46,500, and this 46,500, it's also going to apply in this column because it's equal. Then this is what we have. And then having done that, now we are supposed to get your, here we are supposed to have your net profit for the year. Net profit for the year. So we can just try to see how can we arrive at the net profit for the year. So we are now on a net profit for the year. So we are going to say 342,000 plus our final distribution. So basically we are saying primary distribution plus our final distribution, you get your net profit for the year. So here if we add 342,000 plus 46,500, we are going to get 388,000. 388,500. We do the same thing for Kolisi, 315,000 plus 46,500, and we are going to get 361,500. So even that now we have got our drawings figures as pre-entered, so we can just subtract there by saying 388,500 minus 345,000, and then the answer that we are supposed to get is 43,500. Being a positive figure, then 361,500 minus 371 minus 375,000, you are going to get a negative of 13,500. So a negative, you can put brackets to show that it's a negative. A description of these figures here, we are saying these figures are representing a retained income. So having those figures now, we can now try to go down and see what we have. Remember, we are only left with balance at the end. So to get the balance at the end, we are going to say retained income. So basically balance at the end. Is equal to retained income. Retained income plus balance at the beginning. Yeah, plus balance at the. So as simple as that. So here we are adding. So basically we are saying 43,500. So 43,500 plus negative 30,000. So in other words, we are saying 43,500 plus negative 30,000. You know, a negative and a positive will give you a negative. So it's going to be 43,500 minus 30,000. So here, the answer that you are supposed to get here is 13,500. You do the same thing here. Here now we are saying negative 13,500, because this one is a negative, and then we add 10,500. And you see that the answer that you are supposed to get there is going to be a negative 3,000. So here we are saying 3,000. Since it's a negative, we show it in brackets. So this becomes your final answers. That is our balance at the end. Thank you for listening. Those who have subscribed, please subscribe and share. Let's share the link to our colleagues who are doing grade 11 accounting. Let's turn on the notification button so that with new uploads of videos, we get notified as we wait and prepare for our exams. As for this video, I'm signing out. We'll meet again in the next video.